Hey everybody, Brian Shannon here. I wanted to talk about the ARK fund, the fintech fund that is ARKF. Last week I did a chart on Twitter that showed this prior to this breakout saying, here's a type of stock that looks like it's in late stage one accumulation, getting ready for a potential breakout. And today we had that breakout. So if you look at this market, there's something, there's a lot of lessons in here based on stage analysis. One, you only want to own these things when they're above the rising moving averages. These are simple moving averages. When the moving averages crisscross, it tells you there's indecision. Moving average crossovers represent indecision. It comes near stage three and it comes near stage one. All these moving average crossovers aren't reasons to buy or sell. They're reasons to look at it and say, okay, maybe the shorter term trend is losing momentum and turning lower. The longer term trends will still give the benefit of the doubt to the buyers, but once it breaks down below this level in here, it was clearly dead. It was over, done. Stage 4 decline. We had a 10-week moving average below a declining 20-week moving average, below a declining 30-week and 40-week. All of these rallies, and go back and look at the archives of everything I've said over the last couple years. Every single one of these was not to be trusted. They were guilty till proven innocent while they're still below a declining 40-week moving average. When that 40-week moving average begins to flatten out, as it has in here, and then we have a rising 10-week above the 20-week, above the 30 and above the 40, it's telling you now it's getting ready for a stage 2 uptrend. When it broke this high right here today, that told me this is now in a stage 2 uptrend on a weekly time frame. It doesn't have to exceed this high. This is where we have those compressions, the compression of those weekly moving averages. To me, this says very loud and clear, not because of volume, but because of price, that the buyers are in control. They took control as it broke above that level today. We have a rising 20 and 50-day moving average. That 200-day moving average is flattened out. And now, when we look at the shorter term time frame, the 15-minute time frame, here's what your risk is, I think. When you look at the weekly time frame, this is about using multiple time frames together. We finally have this. If they didn't scare you out down in here, they wore you out over the course of almost a year, 8, 9 months in there. They wore you out. This market did a whole bunch of back and forth. And even here, this rally to me was not to be trusted because we still had that declining 200-day moving average. Now that it's flattened out, now we can say, okay, the buyers on the longer term time frame are back in control. It's the buyer's game to lose in here. As long as I think that you can buy this, let's go back to that weekly time frame for a moment. I think you can buy this for a longer term investment. I'm not an investor, but this is how I look at it. I look at this and say, okay, well, there is a prior level. So maybe on this move, it rallies up to there, maybe gets just up through it, gets the breakout chasers to chase it, pulls back, and then gets going again. Well, then I would want to be a buyer here if I had missed this one. And then where does it have the potential to go? Well, maybe up to this prior support, which had become resistance. So up towards this level, and then the same thing. Or we can look at the anchored volume weighted average price from where this market broke down. Maybe it makes a run for that and pulls back. And we can go back over and over again and just look at these scenarios. The most important thing right now is not to just say, okay, we're in a stage 2 uptrend. I trust this because I don't trust anything for more than the market tells me to trust it. So I start to look at the shorter term time frames. If I was an investor, I know this, that if I bought today or if I buy tomorrow on a slight pullback, or even if I buy a little bit higher tomorrow, my absolute worst case stop would be underneath this little consolidation right here where we have the 20 and 50-day moving average. This might be, so this low in here is 1815, 1814. So I'd put my stop at 1812 if I was an investor. And that means you're risking $1.36. What's your potential upside in here? I don't think this fund goes back to the 50s in that, but maybe it doubles from here and heads up towards that 40 level. It seems realistic that in the next year or so, if you're an investor and your investor time frame, it does something like this. That seems quite reasonable to me. So now is the first time in over 2 years that it has finally made sense to buy one of these products that have been just beaten down so badly. Hope that helped.